Most people think of financial aid as having three components: grants, sometimes known as scholarships, loans, and work study. Don't confuse these. Only the first, grants, are truly financial aid. Loans are just that and have to be repaid. A student loan is no more financial aid than is a car loan or a home mortgage. When we go to buy a car and take out a loan to finance it, few of us would consider that to be financial aid. It is no different with a student loan in college. Similarly, work study is not a gift. The student is being paid to work at a job, and this is no different from any other job. Again, the only true financial aid are grants that do not need to be repaid. To blur the financial aid picture more, there are two types of financial aid grants: need-based and merit-based. Need-based aid is based on the family's ability to pay as calculated by the FAFSA financial aid form. We'll get to that in a moment. However, keep in mind that colleges are under no obligation to meet a family's full financial need, and most colleges are unable to do so for most of their students. Merit-based aid is based on whatever criteria the college chooses to incent the student to attend. Colleges vary greatly in their use of merit aid. For some, it is much of their financial aid budget, and others only offer need-based aid. Let's talk about loans. To pay the net cost of college, that is after any grants, families are faced with either paying the fees from cash and savings or borrowing the money. If you're borrowing the funds, there are three types of student loans, and we'll say student in quotes for reasons we'll explain. The first and best option for everyone are the federal direct loans, sometimes known as Stafford loans. There are a few key points to know about them. They are loans to students and not parents. The interest rate is fixed and other fees are low. These are eligible for income-based repayment programs. Unfortunately, the federal government limits the amount of borrowing, and the maximum amounts are low relative to your need. It is roughly $28,000 of borrowing over 4 years for most students. For financially independent students, the maximum borrowing is higher. To complicate things slightly, these loans can be subsidized or unsubsidized. The difference is simply that with subsidized loans, the interest does not begin accruing until after graduation. This is a valuable benefit and can save money in the long run. Subsidized loans are typically issued to families with higher financial need as determined by the FAFSA. PLUS loans are also federal loans, but they are made to parents, not students. Hence, the acronym stands for Parent Loans to Undergraduate Students. These are not as good as the direct student loans for a couple of important reasons. First, the interest rate and the origination fees are high and may be even higher than private student loans, which we'll cover next. Second, even though these are federal loans, they are not eligible for income-based repayment. Remember, these are obligations of the parent and not the student. The third option are private student loans. These are all other student loans that are issued by financial institutions and state agencies such as MEFA in Massachusetts. These loans may have fixed or variable interest rates, and they may be obligations of either the parents or the students, or sometimes both if the lender requires a parent co-signer. The fees and rates for these loans may be more attractive than the PLUS loans, and there's no inherent advantage to PLUS versus private loans. The most important commandment to remember, and arguably the hardest to manage during the pressure-packed time of college acceptance, is do not overborrow. This is equally true for both parents and students. Student loans have a special quality, which is that they are not eligible for discharge or restructuring in a bankruptcy. So it is critical to understand that any student loans you take out will remain with you for your lifetime until you've paid them off in full. If you get behind in your payments, the fees, Penalties and unpaid interest could haunt you for a very long time. Don't borrow more than you can comfortably afford to repay.